Good afternoon. We're getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson at 3 and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money. We are live on the air on 790 KBC, streaming live online worldwide at kbc.com. And you're on demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all of your favorite podcast platforms. Rough day for stocks. Record-shattering day for Bitcoin. Stocks taking a stumble today as bond yields continue to jump, putting pressure on stocks. Wall Street taking in the latest news on Uncle Sam's debt following a credit ratings downgrade on Friday as Republican leaders tried to get President Trump's tax bill ready for a House vote. The Dow coming in for a closing loss today of 817 points. The S&P 500 down 96, and the Nasdaq tumbled 270 points. The yield in the 10-year note at 4.60%. That's the one that impacts fixed-rate mortgage rates as well as other borrowing costs. Bitcoin, meanwhile, getting above 109,000, hitting a record high today. We'll take a closer look at crypto news here later this hour as well. We see gold, good old analog gold, up more than $6 at 3,196 or so and change, and we're watching what's happening with oil as well, pulling back a bit today, down 34 cents at 61.23 a barrel. The volatility index, by the way, the VIX index, the Wall Street Fear Index, jumped 15%. Bitcoin rallying to a fresh record above $109,000 today, and we are watching all the other cryptos as well. OpenAI buying the former Apple design chief Jony Ives startup for $6.5 billion in an AI product push. That was a big headline today, impacting Apple and some of the other AI names. Alphabet, Google leading a tech rally today as shares jumped nearly 5% among the winners today. Recently, the company announced new AI glasses and a new AI capability for its search product during an event this week. Joining us live now to discuss a lot of this, in fact, just about all of it now, is Art Hogan, Chief Market Strategist at Los Angeles-based B. Riley, coming to us live this afternoon from the 25th Annual B. Riley Investor Conference in Marina del Rey. Art Hogan, thank you very much for taking the call here live with us this afternoon.
Well, Frank, thank you very much for having me. And as always, it was great to see you at our conference today. Thank you so much for coming by.
That's great. Well, you are the star at the conference, and it's great to see so many people welcome you here to Southern California. And, of course, want to join the chorus, and it's great to see you here in the Los Angeles area. And take it from the top and tell us what's top of mind at the conference there today.
Well, I'll tell you this. There's been a pretty big shift in investors' attention market-wide from trade, which has really been the main focus over the course of the last, call it 6 weeks or so. So we sort of went through the trade conversation starting in the first week of March, and then things hit a crescendo on April 2nd, the quote-unquote Liberation Day. And then when we got the 90-day walk-back period for negotiations and a couple of deals announced, or at least the framework of deals being announced, our attention shifted to Capitol Hill. And on Capitol Hill, what's happening is for the Trump administration to extend their 2017 Tax Cut and Jobs Act, and one of the pillars of the administration, they need to pass a budget, they need to raise the debt ceiling, and they need to get approval for all of that through Congress. And when they hit a bit of a road bump today in the House is hoping to get this out by Memorial Day, but there are some Republicans that live in blue states that want the state and local tax deduction, the SALT deduction, increased, and for some pretty obvious reasons. That's something that their constituents would like, and that's one of the things that they haven't been able to agree on. So, in a sense, Frank, when we think about this new administration, what they'd really like to do is tighten immigration, raise some tariffs, but keep taxes low and hope to keep regulations low. And the two latter pieces of that, the extension of tax cuts and the lighter regulatory touch, just haven't shown up yet, and they've been a more difficult process. So the market is starting to take notice of that, especially the bond market. So you touched on that. The yield on the 10-year moving up to 4.6%, and that sends off some risk-off signals to equity investors, especially since we've had a significant rally since the lows of April 8th. The S&P 500 got back into positive territory for the year after being down nearly 20%. So I think that's the machination we're going through today. Unfortunately, no one likes to watch the sausage being made up on Capitol Hill. And right now it's getting messy in the House. Eventually they'll get around to a bill that they can move on to the Senate. We can move on from this conversation. But when you're in the thick of it, markets just don't like to watch that show.
And the bond market very much in focus once again. What do you think the threshold will be for that important yield in the 10-year note, which we keep referencing, which impacts borrowing costs, including mortgage rates? What threshold do you think it would have to hit for any changes to take place in policy, as we've already seen in the last month or so?
Yes, that's a great point. I would tell you this. I think the folks that look at this technically see a significant amount of resistance on the 10-year at the 4 3/4 level. So I think that the fact that it's not necessarily the level you get to, it's how fast you got there. And we basically went from 4.38% to 4.6% over the course of 3 trading days. And that's a very fast pace for Treasuries yields to back up. And my guess is that movement likely peters out either where we are now or somewhere close to 4 3/4, then it starts a trajectory lower. That will likely coincide with the ability to get something passed in the House on the budget and on the tax cuts and on the debt ceiling and work its way over to the Senate. And, that has its own drama with it. And then once we get all of this signed and on the president's desk and signed, we'll probably start that trajectory back lower on the yields on the Treasury curve. But in the here and now, when we're going through this sloppy process, it's also important to note that we had a Treasury auction today that didn't go that well. And so, unfortunately, that just added to the drama of the Treasuries. And markets having had a very good run over the course of the last 3 weeks, take notice to that and start to drop down. And that's exactly what was the main driver in the activity today.
On the air live with veteran market strategist Art Hogan, chief market strategist at B. Riley, based here in Los Angeles, coming to us from the big investor conference today in Marina del Rey. And Art, of course, crypto shining today, so-called digital gold, Bitcoin moving above 109,000 for the first time, hitting an all-time high. Analog gold also moving higher today, around 3,320 here at last check. Give us your analysis of both Bitcoin, so-called digital gold, and gold, good old analog gold at this point.
Yeah, so I'll tell you that the excitement in Bitcoin certainly corresponds to a couple of things. So when markets were getting a bit defensive, even at the beginning of the year before we knew what the tariff proposals were going to be, Bitcoin was starting to catch a bid because it was an area of diversification, right? So it's what's referred to as an alternative or a non-correlated asset class. What's changed with Bitcoin is the ease of use. You no longer have to go to a crypto exchange and open a wallet. You can actually buy an ETF. And there's multiple variations of Bitcoin ETFs. So access has become easier, and it's become a bit of a momentum. And so it's seen as an alternative. It seems to be correlated and have some defensive properties to it. It seems to be uncorrelated to equity markets and bond markets, and there's a significant ease of use with multiple ETFs that are functioning very well. So all of that sort of drives that excitement there. The other way to think about it is there are multiple companies that are looking to follow the strategy of having some Bitcoin assets on their balance sheets, and there are also sovereign funds that are looking to be buyers of cryptocurrencies and Bitcoin in general. So that's been the driver, I would say, the entirety of this year. The flip side of that is gold. When gold has got different properties, it's also an alternative asset class, but in the precious metals, it's seen as a much more defensive, right? So the correlation between gold and Bitcoin has broken down. While they're both doing well, I think gold has been bought more by central banks. I certainly think ease of use with the ETF GLD is certainly easy. But I think people look around the world and see the potential for inflation with tariffs. That's one of the drivers. The potential for geopolitical hotspots with Russia, Ukraine, China, Taiwan, the potential for India and Pakistan, and everything that's going around in the Middle East, Israel and Hamas. So when there's a lot of geopolitical uncertainty, then gold catches a bid. But I would say that what's been happening in gold is really a 2-year phenomenon. We were basically in a 12-year base for the price of gold and broke out of that. So technically people start to look at that and said, well, there's a very long base, so there's probably a lot more room in space for gold to go up, and it certainly has proven that out where we've seen a new high in gold virtually every month for the last 12 months. So does that continue? Well, some of those potential drivers for gold will dissipate a bit. We may see an end to some of those military conflicts. We certainly may see less inflation than is anticipated because of tariffs. And some of the shine might come off that commodity, but it certainly had a great run and likely see some underlying strength if there's any significant pullbacks.
On the air live with Art Hogan, veteran market strategist at B. Riley, and certainly a lot of discussion at all conferences these days about uncertainty and tariffs and how this is all going to play out as it relates to the economy, whether there's going to be a recession and whether inflation will spike as a result of all this. So what is your assessment on the impact of tariffs on the economy and inflation specifically?
Typically two things happen. So the uncertainty has probably gone down quite a bit now that we've sort of gone through the chaotic announcement of Liberation Day reciprocal tariffs that hit the world by surprise, right? And typically in Wall Street, we don't get surprised that much. Consensus estimates usually are pretty close to what the eventual rollout would be. And everybody was shocked by the magnitude of the potential reciprocal tariffs on about 190 different countries around the world. That uncertainty has receded quite a bit now that we have the template for at least a deal with the UK. We likely will hear about multiple deals in the coming days and weeks that'll likely be similar to that, where it's basically a 10% universal tariff with some carve-outs for, specific industries. Think about things that we don't produce here, can't produce here, things, so of that nature. And I certainly think that's what, the end of this trade war looks like. So as that uncertainty has receded, I think that is transferred over to the uncertainty of getting a budget done and getting a trade balance lessened and working on what we think about in terms of what the new fiscal policy is going to look like. Does the Tax Cut and Jobs Act replicate itself, or are there going to be a lot of changes around the edges? Because there's been a lot of promises for this new tax bill. All of it costs money, and we have to find ways to pay for that. So people start to worry about the deficit, and that's why we're going through this environment of uncertainty now about the budget more than we were about for the last 6 weeks about trade. So I think that sort of risk factors have shifted from a major concern over trade and tariffs, their impact on the economy. I think at the end of the day, we will go from what was last year an average tariff on imports of about 2.5% to something closer to, call it 14%. And that's something we can start to model out, see how that impacts retailers, how much of that's taken up by the gross margins of the retailers, or how much that's going to be thrust upon the consumer. It's likely to be about 50% at the end of the day. Once you know what that is and know it's a one-time event, and then you can start thinking about how much that drains out consumer spending and what the impact is on GDP. That's the point at which the Federal Reserve starts to come in and says, okay, we're seeing growth slow down, we're seeing unemployment start to pick up, and we will likely see the Fed cut rates. That probably doesn't happen until the end of the summer, maybe at their September meeting. I'd say that's the state of play right now. That could always change, too. We know that there's, basically one voice that decides what these deals look like. If they continue to look like the UK, then I think we're in a better place. If we start to see some abnormalities around that and can't get trade deals cut with Canada and Mexico, with Japan and India, well, then we may go back into a place where we start worrying more about trade than we do about the budget.
On the air live with veteran market analyst Art Hogan. And Art, no conference would be complete without a discussion on AI, which of course is coming up at your conference there now. And let me ask you this: what do you think is more important to the markets right now, tariffs or AI?
Well, I think they go hand in glove, and I say that because artificial intelligence is clearly already starting to make companies more productive, right? And the more productive you get, the more you can actually stomach some input cost increases, right? So if in fact artificial intelligence is already starting to make your company more productive, and then you have some margin that you can slide over to what might be higher input prices, at least on a one-time basis coming into the end of the year. I would also offer up that when we think about artificial intelligence, it continues to improve not just companies' lives, but individuals' lives. So, consumers are becoming more effective in the decision-making process that they go through. So I think we haven't even captured the tip of the iceberg in terms of productivity gains. Increased productivity makes us more profitable, and more profitable means earnings grow. And I certainly think estimates for earnings growth this year and next year are understating the impact of artificial intelligence. The most important piece of this is we've heard from the biggest of the spenders, the hyperscalers, about how much they're spending to continue the process, to continue to improve their artificial intelligence business models. And as that continues, that will continue to show that we've probably overdone it in a lot of the Mag 7 names, and the sell-off that we saw for most of the first quarter and into the second quarter. I think there's going to be a significant bounce back. That likely happens when NVIDIA gets around to reporting their earnings at the end of this month. They can confirm what we think we already know about CapEx spend as it pertains to AI, and we're starting to hear, about countries in the Middle East that want to spend a lot of money increasing their artificial intelligence projects, and that was new news as of last week. So I would say we're in the very early innings of this artificial intelligence revolution. I think we'll continue to dominate as a theme, and I think that the early this year sell-off on a lot of those names has likely been overdone.
On the air live with Art Hogan, and as you mentioned, we've seen an impressive bounce back in many of those names already, including Tesla, which I did see pull back today about $9, back to $334, but certainly that's seen an impressive rebound from its recent low. Apple at 202 or so, NVIDIA at 131 and change. Google moving higher today, up nearly 5 at 170 and change. Do you have any favorites in the Mag 7 names?
Yeah, I'll tell you this. It's I separate Tesla from that conversation a bit. It's one of the sort of originals in that, but it's goes through a lot of iterations with Elon Musk's involvement with the administration, but also his having to retool for his most popular model, and really the valuation being driven by the promise and dream of both robotics, which is probably 2 years out, in autonomous driving, fully autonomous driving, which is has been promised to be this year's business. So I kind of separate that from the rest. And then when we look at the rest of the companies and say, who is actually trading at the most reasonable valuation that falls into this category? And in the here and now, I would clearly say you start at the beginning of the alphabet. I think Amazon probably is the most reasonably priced for its history, with all of the things that they're doing and the dependable cash flow they have. The second is Apple, and I think Apple is kind of misunderstood in the AI landscape, only in so much as they're a fast follower. They're not going to develop their own business. They're going to try to figure out who they're going to partner with. That gives them the ability to be flexible. So they haven't been spending multiple billions on this build out of their own. They're just going to figure out who the best partners are to adapt their user base to have access to artificial intelligence. That gives them a lot more flexibility. I think that is underrated in its current price.
Excellent, and it is to be noted, you're right, Tesla was originally part of the Mag 7 officially, but has been replaced by Broadcom. That is now part of the Magnificent 7. The ticker symbol on Broadcom is AVGO. At this point, Art Hogan, let me ask you the big question here while we have a moment here. And again, thank you so much for stepping away from the conference there to join us here live this afternoon. Any specific places where you are putting money now and/or taking it off the table?
Nightly Scroll with Haley Carania.
It is Haley Carania. I'm excited to be here because there's a lot to scroll through on X, on Instagram, on TikTok, on Truth Social. Love seeing you all in the chat before the show. I tried to jump in just a few minutes before to say hello. I love the chat interaction. Thank you for helping. Love all my homies that I get to scroll with. If you want to listen, Nightly Scroll with Haley is where you can find me. Just search that up and I will be there. We've got to spread the word far and wide.
Nightly Scroll with Haley Carania. Follow and listen on your favorite platform.
Yeah, one of the four pillars of this administration is going to be less regulation. When we think about less regulation, the first two industries you think of immediately would be energy and financials. And I think both have compelling valuations still, and I think there's a great opportunity for a lighter regulatory touch to help both of those. Now, also when the markets have gotten very defensive, one of the things you saw was people flocking out of technology, communication services, and consumer discretionary and flooding into things that were things that you need, right? So consumer staples, utilities, healthcare. And I think in the case of consumer staples, they're trading at a multiple that's not defensible right now because it was a popular defensive sector. I would be careful in the staples. They're trading at 22, 23 times earnings. They typically trade at 15 or 16 times. So they have something to give back. But I certainly think in terms of this run up in pulling back on regulation, I think you have some great opportunities in both energy and financials.
Fantastic, Art. Well, thank you very much for joining us live here this afternoon from the big B. Riley Investor Conference in Marina Del Rey. It's always great to see you here in Southern California. We wish you a wonderful time here and look forward to more conversations with you. That is Art Hogan, Chief Market Strategist at LA-based B. Riley Financial, and their big annual B. Riley Investor Conference underway. Art, thank you very much for joining us live here this afternoon.
Always a pleasure, Frank. Thank you so much.
Thank you very much. And out to the freeways now on 790 KBC. Frank Mottek here for United Gold Group. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt at more than $36 trillion and climbing, the possible recession on the horizon, and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Tune in this Saturday at 8 a.m. to hear me interview Dave. He's the boss at United Gold Group, and you'll learn a lot about how to invest in gold. Or give my friends at United Gold Group a call right now at 800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver with a qualifying purchase. Call now, 800-753-8534. 800-753-8534 or visit UnitedGoldGroup.com. Mottek On Money continues 790 KBC. Bitcoin hitting a record high today, about 109,468. Right now, hovering at around 108,815 here at last check. Ethereum hovering at around 2,531. That one has seen an impressive rebound. Still well off its all-time high. Doge at the moment at 23 cents. The Dow, though, coming in for a closing loss today of 817 points, settling at 41,860. The S&P 500 down nearly 100 at 5,845. The Nasdaq down nearly 300 points at 18,873. The yield in the 10-year note popped back up to 4.60%. The volatility index, Wall Street so-called fear index, the VIX index, moved up 15%. Taking a look at gold, it's up about $6 now at $3,319 and change. Tesla pulling back $9.20 at $334.62. Nvidia down $258 at $131.80. Apple down more than $4, back to $202 and change. And Google up nearly $5 at $170.06. And now the latest news on 790 KBC. Mottek On Money continues here on 790 KABC, watching what's happening in Washington as this drama plays out involving President Trump's tax cut bill, the so-called Big Beautiful Bill. They're still working on it. The House Rules Committee, according to CNBC, is holding a marathon session that began last night as Republicans try to push the president's Big Beautiful tax bill to the floor for a vote. Looks like it's facing some new hurdles as some Republican holdouts meet with President Trump at the White House. A lot riding on this, of course, as the president's Big Beautiful tax cut and budget bill inches its way through Congress. An analysis of that legislation shows it's among the most pro-small business bills in recent history, if it happens. The latest news is House Speaker Mike Johnson is just days from his self-imposed Memorial Day deadline on this Big Beautiful bill, and he's struggling to get the party's hardline conservatives to coalesce around the package. According to CNBC, House Freedom Caucus Chair Representative Andy Harris, a Republican of Maryland, said there was no way the bill passes on Wednesday. Today, hardline conservative holdouts did go to the White House for a last-minute meeting with President Trump. So House Republican leaders facing a last-minute revolt today by members of the party's hardline conservative faction who opposed their latest attempt to win support from moderate members of the conference for President Trump's so-called Big Beautiful tax bill. Latest reports say at a pivotal meeting of the House Rules Committee entered its 16th hour this afternoon after Speaker Johnson's self-imposed Memorial Day deadline for passing the bill on the House floor looked more and more difficult to meet. Representative Harris, also Representative Chip Roy, Republican of Texas, were among the members who met with President Trump at the White House this afternoon in a hastily arranged effort to unify the Republican conference. Speaker Johnson said he was trying to get the bill in its best possible form, and in his words, we're trying to meet our deadline for the vote. In the meantime, as we've been discussing earlier this hour, the stock market did take a tumble today on concerns that the president's spending bill would pass and lead to exploding federal deficits and weaker long-term fiscal health for the U.S. The yield on the 30-year Treasury bond yield hit 5.09%. The yield on the 10-year note is back up to 4.60%. This is something policymakers as well as the markets are watching very, very closely. Of course, the yield on the 10-year, as listeners to this program know so well, is the one that impacts the fixed-rate mortgage rates, which have been inching higher recently. In fact, moving above 7% for the average 30-year fix recently, according to our mortgage experts who we've been talking to. Speaker Johnson's narrow Republican majority means that he can only lose a handful of votes now from this Republican conference and still pass the bill on a straight party line vote. Harris, Roy, and the rest of the Freedom Caucus, according to CNBC, wielded enough votes and influence that their continued opposition to passing the package all but guarantees that it would not pass in its current form. Still, the president remains hopeful that Republicans could force the bill through the House before members leave for the Memorial Day holiday weekend. The president said he felt very well, in his words, about the bill during brief comments made to reporters at the White House today. We have a quote here saying that we're doing really well. It's very close, the president said of the bill before meeting with South Africa's president at the White House today. Now, before the tax package can proceed to a vote on the House floor, Republicans on the Rules Committee must vote to adopt the specific slate of rules that will govern debate on the bill ahead of the actual vote. As many of our listeners know, the Big Beautiful Bill seeks to deliver on the president's key campaign promises, includes provisions to make permanent the president's 2017 tax cuts, raising the SALT cap, which is a point of contention this time around, and eliminate taxes on tips. That's all part of the Big Beautiful Bill, as it's known. A new analysis from the nonpartisan Congressional Budget Office, meanwhile, estimates that in general, resources would decrease for households in the lowest tenth of the income distribution, whereas resources would increase for households in the highest tenth. President Trump visiting the Capitol earlier this week to personally advocate for the bill, issuing a stark warning to House Republicans not to mess around, to put it politely, with Medicaid. Some Republican House Republicans want massive cuts to Medicaid health care coverage, which covers primarily the low income. In the meantime, the National Federation for Independent Business has released a survey, which we're hoping to talk to about with their top guy. Not only does the bill preserve the 20% small business deduction, it raises the deduction to 23%, giving even more incentives for business owners to hire more employees, increase wages and benefits, buy new equipment, and otherwise grow their companies and the economy. The vice president of the National Federation for Independent Business and the NFIB's head of federal relations have tracked the bill from the very start and have been keeping us well informed here on this program. We hope to be joined by one or the other here shortly. They know every line in the legislation. The benefits to small business are extraordinary. They've been telling us, making speedy action by the House and Senate essential to the economy and small business. Big news is the Big Beautiful Bill includes a 23% small business tax deduction compared to the current 20% rate. So that's a big deal. And we're watching what's happening with this very, very closely. The NFIB website, of course, has a lot on this. A new polling showing strong support for the small business tax deduction. In fact, the survey that they released shows more than 8 in 10 Americans feel it important for the federal government to support small businesses right off the bat, including strong majorities of Republicans, Democrats, and independents. That support translates to strong agreement that making the 20% small business tax deduction permanent should be a top priority for members of Congress. Nearly all Americans, 95% in the survey, expressing some concern about the impact an expiration of the deduction would have.
Hey there, I'm Paula Pant, host of the Afford Anything podcast. I help people make the smartest money decisions possible.
You should not do the 401k loan.
Reason number 4,872. Are we heading for a recession?
You'd be shocked.
Dumping it into the house?
Invest in flipping houses.
Mathematically the better option.
Paula Pant's really keeping us in business.
Because face it, money's too important to wing it.
Review your budget.
Take the reins.
Sharpen your skills.
Do the things
Start a side hustle
that will affect your life.
Right.
Afford Anything. Follow and listen on your favorite platform.
The research reinforcing the high stakes of this congressional tax debate, according to the NFIB president, Brad Close, who has joined us on this program. He said Americans recognize the immense value of the 20% small business tax deduction and are concerned about the devastating consequences should Congress fail to act. The NFIB strongly urging Congress to make the deduction permanent and delivering the certainty that small businesses need to continue to grow, hire, and give back to their communities. Americans overwhelmingly support small businesses, with the latest survey showing 83% of respondents saying that it was important for the federal government to support small business. 45% believe that supporting small businesses was extremely important. More than two-thirds of Republicans, 83%, Democrats at 86%, and independents at 79% said that federal support for small businesses was important. Nearly 8 in 10, 79%, want to see more support for small businesses. Americans support the expiring 20% small business tax deduction that was included in the 2017 Tax Cuts and Jobs Act, also known as the TCJA. Americans also believe the 20% small business tax deduction has helped small businesses and the American economy, and they're cheering the prospects of this possibly going up to 23% in the bill that's currently under consideration in Congress. We'll continue to follow this big story very, very closely and hope to connect with our friends at the NFIB again as soon as possible. But right now, let's see what's happening here on the Southern California freeways. Let's get the latest on your ride now on 790 KBC. Mottek On Money continues here at 790 KBC. Big day for Bitcoin and those who follow the crypto world, with Bitcoin hitting an all-time high above $109,000 today. Right now hovering just below that. Ethereum up around 2,530 at last check, and Doge also moving up to 23 cents. Joining us live now is Dan Novias, who is a serial entrepreneur. He's had the laser eyes on for quite some time following the cryptos, co-founder and CEO of Mode Mobile. Dan, great to have you with us here this afternoon.
Thanks for having me, Frank. I appreciate it.
Wonderful to connect with you, and certainly I know you've been following cryptos for quite some time, long before Bitcoin got to 109,000 plus today. But give us your reaction to the big news here, first of all.
Yeah, I mean, it's awesome to see. I think that it's, as you're saying, I was in the space 6-7 years ago. I remember being on CNBC and telling people it was running around 10K. We had just hit the $10,000 mark, and it was like, this asset is going to definitely go to 100,000 plus, and it's been amazing to see, how far it's come. Some of the stuff that I think is most interesting as of today, obviously we've had a lot of shakiness in the markets over the last 2-3 months, but Bitcoin's been relatively resilient even during these downtimes, which kind of shows investor sentiment. It used to be a very risky, volatile asset is how people were looking at it. But it was it's been doing quite well because investors are seeing it as actually an inflation hedge, a risk hedge, especially given the broader economic uncertainty that we're generally seeing. And now people are starting to predict that there's a lot of inflation and potential rate easing. And, I think that's why we're seeing just the amount of interest from ETFs and buying behavior ultimately hitting these new all-time highs.
And, of course, it's just human nature. When something hits all-time highs, it gets attention, as is the case was the case certainly with gold, and now with the Bitcoin hitting a record high above 109,000. But what gave you the confidence already years ago when you said you predicted that Bitcoin could go to 100,000 already years ago? What gave you the confidence? How you obviously had a pretty good crystal ball here. What gave you the confidence to make that prediction?
Yeah, I mean, I just started really, I guess, like from just really thinking about trends, as a whole. I think obviously these numbers have changed at a time, but I think today gold is call it a $20 trillion asset. Bitcoin is a little over a $2 trillion asset, and so it's always been this 1/10 of gold kind of range. 6 years ago, if you kind of look at that and you think going back to the 70s, the 80s, what gold was for that baby boomer generation, and then you think about the millennial generation, the Gen Z generation, it's a digital generation. And I think, Bitcoin, that comparison of digital gold. And so thinking about that generation, are they more likely to be interested in investing in gold or investing in something like Bitcoin, which is that digital gold and it's on the ledger? And I think that's kind of what got me really into it early on. And if you just think about that and that big wealth transfer that's happening right now from the baby boomers to millennials, to Gen Z, I think it's only going to continue. And, I think once you started seeing the writing on the wall over this last year with the BlackRocks of the world really, championing Bitcoin, and now, the Trump administration, who's obviously talking about the strategic reserve, now it's definitely more of a no-brainer. But yeah, back then there was definitely a risk to it, but I started just thinking about it from a generational standpoint of hey, this is the Bitcoin of my generation. Or sorry, the gold of my generation.
Very interesting. Very, very interesting. And we're on there live with Dan Novias, and you're a serial entrepreneur. You have a very interesting entrepreneurial story. Dan, you want to tell us how you got started on your entrepreneurial journey here?
Yeah, happy to give a little bit of context. Yeah, I've been entrepreneur ever since I was a teenager. Always had looked at markets in a unique way. Started an e-commerce company in high school that, by the time I was a senior, was doing a couple $1 million a year in revenue. And most recently, continued to evolve in the digital place. We recently created a smartphone called EarnPhone that, pays you as you use that phone. And have been fortunate to be able to have over 45 million users utilizing that device and that software to earn money while they use their phone, the 40 or so hours a week that people are spending.
Very interesting. How do we get more information about that? How do you? We can make a fortune here based on how long we've been on our smartphones just today. So tell us more about that.
Yeah, any investor or user can check it out at modemobile.com or invest.modemobile.com. But, we have about 50,000 shareholders, so anyone can invest in the company or use the service and earn shares for free. But at the end of the day, as you're saying, there's 168 hours in a week. If you're sleeping 8 hours a day, about 112. And people are spending 40 to 50 hours a week on their smartphones. So that's kind of the general premise of that business. And big tech is making trillions of dollars on your time, attention, and data. And we're trying to right-size that equation.
Very interesting. Well, thanks for sharing that. And is there an AI or a crypto component to that as well?
There are some mechanics of which people can earn crypto for free without any risk per se, just by utilizing the device. And, we're always very Web3 forward-thinking service and looking at other ways that we can utilize AI not only to make our product more efficient, but also to help people, especially underserved people, create new forms of income. We look at the smartphone as a conduit of opportunity. And that is some of the ways that we're looking to utilize AI, to make the world a better place where people can earn a little bit more money just through the things they do every day.
All right. And as far as any reliable crypto analysis, is there any source that you go to? A lot of people are confused or uncertain about what's good analysis on Bitcoin. But let me ask you, where do you think Bitcoin goes from here?
Yeah, I think the Bitcoin right now I think that if you don't have at least I think conservatively 1% of your overall net worth, and I think more is definitely makes sense in the single digits. It would be relatively foolish because I think at this point in time, if you look at just the tailwinds that we have here, there is this idea of the Bitcoin strategic reserve, and the U.S. government, they are very focused on this. And I think that if you later this year, we are going to see the approval of that bill, and whether we use this tariff money or the U.S. government reprices its gold, which is still priced at the same value, it was in the 1970s. That is going to be a tremendous amount of buying pressure that comes in, potentially 5% of the overall economy. So I think that's why you see guys like Michael Saylor, who's the CEO of MicroStrategy and is probably one of the biggest individual holder of Bitcoin, buying so much, and the BlackRocks of the world. So, I definitely think it's a good time to check that out, specifically Bitcoin. Other cryptos, you can get, be flexible on, but definitely Bitcoin is a solid play there.
Great, Dan. Thank you very much for joining us live here this afternoon. That's Dan Novias, who's a serial entrepreneur, co-founder and CEO of Mode Mobile, and also got the laser eyes on. Dan, look forward to more conversations with you. Thank you very much for joining us live here this afternoon on Mottek On Money on 790 KABC.
The Bigger Pockets Podcast Network is your home for real estate investing.
So why real estate?
We keep saying it, but the housing market is shifting more and more towards a buyer's market every week.
Guess what, folks? You can still buy real estate today.
You can buy a quality rental property today
and build an investment portfolio that cash flows monthly.
These are my favorite markets for cash flow.
And build wealth long term.
The world has changed, but the best way to invest in real estate hasn't.
Search for the Bigger Pockets Real Estate Show anywhere you listen to your podcasts.